Hi everybody and welcome back to my channel. In this video I'm going to share with you a complete review of my week trading pound dollar in two different accounts. That's my live trading account and also my account that I have with the prop firm, the 5%ers. At the beginning of the week you may have caught my video where I did my weekly forecast for pound dollar. It's a bit of a new addition on the channel that I've started on a Monday doing a weekly forecast. I'm really enjoying it and I think you guys are as well. Let me know in the comments below if you are and I will continue to make them. But I'm going to share with you how the price action for the pair for the week played out compared to what my prediction and my analysis was at the beginning of the week and how I managed to capitalize on those market movements. I've also got some updates and some projects I've been working on behind the scenes that I will talk a little bit about later in the video, so make sure you stick around right until the end. But as always, make sure to like and subscribe to the channel and let's dive into the video. So first things first, here I am on the weekly time frame for pound dollar just to see what has actually played out this week. Now a lot of these horizontal lines, kind of try to ignore them for now. They may look messy, but they are key levels that I use to trade around. The black ones are institutional price levels, the blue one is a weekly level, and the orange one is a key daily level. And as you can see, this was my little comment at the beginning of the week, which was that I was long biased based on the previous weekly close. I marked what the open was. I thought that price may look for a possible dip down to an institutional price level or the key level on the daily, the Fibonacci. And that was where I was going to look for an entry long. And what's quite nice is we pretty much got that move. So as you can see here, this was where price opened at the beginning of the week. From there, we did have this wick down where price moved down to this level here. Now this is a key level that I've drawn out using the Fibonacci tool on the daily. This is how I did it. So on the daily time frame, I used the previous pullback from the previous week on the daily. I went from the bottom and I applied it to the high on the Monday, and that gave me these three levels here. These are what I would consider to be the optimum trade entry levels. And instead of having this fib on the chart to make it look a bit messy, I decided to just draw out this box which marked those key levels, those optimum trade entry levels. And that's what we pretty much got on the Monday. So price opened up on the Monday at the start of the week and we had a bearish dip down and it pretty much came to those levels on the fib. It managed to grab the liquidity that it was looking for, and then we got this bounce up Tuesday, and then as you can see, pretty much for the remainder of this current week, price has been very bullish. It's been pushing up. It's managed to push back these key levels that I was quite interested to see how it would react around because they've been quite significant. Price has been below these levels twice, but this week we've actually got a very strong push above those levels. Now we're in an interesting area here because this has just been a gap down previously. So it looks like we are filling that area on the daily time frame. Be quite interesting to see how this goes ahead next week, but that I will talk about in the video on Monday, so make sure you catch that on Monday. So how did I capitalize on these movements this week in the market? Well, as you can see, Monday was quite a choppy day because it was the pullback down. And I was waiting to get long at one of these key levels. So as it stands, I didn't actually take a trade on Monday because for me that was a pullback day. However, on Tuesday, I managed to capture a really nice move, a long position, and gain some profit on both my live account and my account with the 5%ers. So I've just moved on to the 5-minute time frame. I'm zoomed out quite a lot, and as you can see, these are the section dividers. So this is Monday's price action that dipped down to that Fibonacci level. Tuesday was where we started to get the rise, where I got my nice winning trade, and then Wednesday and Thursday, price continued to push higher. So let's have a little look at Tuesday's data first. So the way that I traded Tuesday, if you're wondering what these blue levels are, these mark a fair value gap on the daily time frame. I do talk about that in the weekly analysis at the beginning of the week. So again, I've got a link to that video above if you want to watch that. But once price had come down to this fib level and we started to get a push up, at 7 o'clock in the morning on Tuesday, we had positive news for the pound, which meant that it gave strength to the pound and weakness to the dollar. And we saw this push up here. That gave the volume that we needed to start to kickstart that bullish movement upwards. But as you probably know, I like to trade the New York session, which runs from 1:30 till around about 4 GMT. Now, there was also some news out on Tuesday for the dollar at 1:30, so I was waiting for that news release before I got into any trades, just to make sure that it was in line with my technical analysis, which it was. It was negative news for the dollar, which meant that in this occasion it gave strength to the pound, and at 1:30 we saw another push up here. And quite simply, because that made a new high of the day for Tuesday, I was already long biased, price was pushing up. All I needed to do was look at the most recent candles on the 5-minute time frame to gauge my entry for a trade plan long. And to gauge my trade plan, I used simple market structure. So price had that push up with the news release. It made a new high and a new low. We had another push up here and a new low forming and a new higher high, little consolidation low before a push higher. So for this plan, I used my Fibonacci and I went from the most recent higher low using the bodies only and applied that to the high, which at the time I did this was around this time here, just after that news release. And that gave me these 3 optimum trade entry levels on the fib. So I marked them with the key level so that I could remove the fib just to keep my charts tidy, to keep it simple and more clear to understand. Once I had these levels established, so at this point in time, I could pretty much just see this here. I then set my long at the top of those key levels. So my long was set around about 78 and my stop was below these levels here. So I believe I used a 20 pip stop in the end. And I'm looking for a break of the session high and also this institutional price level. So I wanted to see price push above this level, but I always have a minimum of 1.5 R. So my target was around about this level here. So after I set this trade plan, price came down, it triggered me in, it hesitated for a bit, it actually retested my entry. So I held this for around about an hour or two before it actually took off and it hit my target at about 4:10, which I think was when I was playing with my little boy. I had a trade alert go off my phone, which is always a nice alert to get to say that it has hit the target. So that was my trade taken on Tuesday, and I start to the week banking 1.5% in both my live account and then also my account with the 5%ers. And I'm just going to take a quick moment before we carry on with the analysis to talk about the 5%ers. You may have heard of them before. I've mentioned them a lot on this channel. They are the prop firm that I like to use for trading. The 5%ers are one of the leading prop firms in the industry. They offer a few different programs for traders, but they've had some massive news released this past week on their high stakes program, which is one of their new funding programs. And it allows you to take a challenge, which previously gave you 30 days to either hit the profit target, progressing on to the next step, but you also need to respect the rules. And the end result is that you are able to potentially trade their company capital if you pass their challenge, and you take a share of any profits that are made. Well, they have a few different account sizes available depending on what skill level you are at as a trader, starting from the bottom, going all the way up to a $100,000 account, which is the one I'm on here. But their massive news is that they've just removed their time limit. So previously you had to pass the challenge within 30 days, which, as you can imagine, adds a lot of pressure and stress to a trader who doesn't really need that extra pressure or stress. So this is a massive improvement on their account. It's made it a much more enjoyable experience, it's made it more realistic, and it's made the chance of becoming a funded trader a lot more achievable. So I'm completely recommending this program because I think it's very fair, and I think this is definitely an improvement. If you want some information, I have got a link below in the description. If you follow that link, I believe you should also get a discount as well if you decide to have a go for yourself, so check it out. But I've actually got a review video coming next week, which is going to talk purely on the high stakes challenge. I'm going to really talk about the ins and outs of that program, what you need to do and what rules you need to respect. So if you're interested, make sure you are subscribed and keep your notification bell ticked so that you get notified when that video gets released. So hopping back onto the charts now, back on the 5-minute time frame. So that was my day for Tuesday. Moving into Wednesday and Thursday, though these were very choppy days for me, to be honest. Not so much choppy, but more potentially emotional. And I think I did well to manage my emotions. And that is because I'm going to just go over these sessions like this so you can see what happens. Let's look at Wednesday first. And as you can see, Wednesday opened at this level here, roughly. And for the start of the day for New York, we got some consolidation. In the New York session, we started to get this nice push up, which moving into New York, it consolidated a little bit before the New York open, and then we got a push up. And it ended up being a rather frustrating day for me because I basically spent the New York session just following this and trailing my buy limit order. It was one of those days where, although I followed my plan and I had the right idea, price just didn't come back and trigger me in. It went without me, and that can be very risky because it can produce FOMO, the fear of missing out emotions. And I kind of was aware of that in the background, but I was okay. I didn't let it bother me. I didn't jump in because I didn't want to just jump in and then obviously get in at the wrong time. So I ended up watching this move up without me. And the reason I didn't push it and was more conservative is because Wednesday evening there was a major news release for the dollar FOMC, which explains this big drop down here and why I didn't just jump in at any point or have an order set overnight, because that's what news does. It creates this uncertainty in the market and you don't really know where price is going to go. Now, I had this key level drawn during the day, which is another fib level, going from the previous low here up to the high, and you can see those 3 optimum trade entries. This key level marked that, and in the end that acted as a little area that managed to just capture this drop down for price. It created a bounce and it actually returned to that area, moving on into Thursday. But Thursday for me was very similar to Wednesday. I ended up watching price. So again, if I just move this line here, I'm going to drop it at the start of Thursday's session open. So price opened around here. For the start of Thursday and into London, price was actually trading in the red, so it was below the daily open. All the way into the New York. Now, at 1:30 we had news release, so I was waiting until the news was released before I got into a trade. And I had an order set at this level down here at 50, the institutional price level. I had a larger stop set at 20 pips, just sort of below these levels here. And once again, I was aiming for a move up to this institutional price level. So I was looking for a larger target. But unfortunately, after that news release, price just didn't come down and trigger me in. And once again on Thursday, I ended up just watching this lovely push up. But where do you get into this? For me, for my trade plan, there wasn't an opportunity. There wasn't a safe opportunity to get into this where I can manage my risk effectively, which is my priority when I trade. I had another plan drawn out here, which was just before the session close. And you can see how close price came to actually getting into that, but it didn't get me in. So once again, I did trade Thursday, but I didn't actually take any trades because price went without me. So as it stands this week, I've only had 1 trade, although I did trade 3 days out of the week. But I'm still green. I'm happy with the end result. I feel like my trading performance has been well, and I didn't get emotional. So all in all, it's been a successful week for me trading. And I think that a large part of that, and something I've not actually shared with you guys on the channel yet, is that a few months ago, I've actually enrolled onto a course. It's a course in NLP. I don't know if you've heard of it before. NLP stands for Neuro-Linguistic Programming. NLP can basically be used as a technique to help you to reprogram any unwanted behaviors or habits. So I have been looking into it for a while, and I decided to enroll on a course to use it purely to help me with my trading psychology. Now, I'm about 70% of the way through the course, and I've found that it's really drastically helped me. It's really helped to improve my trading psychology because it helps me to just become more aware of any behaviors that I had in relation to trading, any emotional responses, any unwanted habits. And it's helped me to just deal with that, to just go through the process of understanding it and allowing it to not affect my trading performance. And I feel that once you have a grasp on the technicals, on the fundamentals, when you get your edge, all that is left to pretty much get with trading is trading psychology. And that's where I am at now, and at the moment doing really well on. So I'm working through the NLP course, and it may be something that I'm going to share with you in the future. If you're interested, do let me know in the comments below. But that's not the only thing I've been working on as well, behind the scenes. I've also for some time now been slowly but surely working on an ebook due to a lot of requests from subscribers, from followers on Instagram and Facebook, and private emails as well. I've had lots of people asking for some help on how to get started trading the Forex markets. So that's exactly what I've been doing. I've been putting together an ebook to talk more about that, and then also with a section of my own experiences. So I'm hoping this to come out before my baby. So if you're interested in that, do let me know in the comments below, or feel free to drop me an email to emily@mindfullytrading.com and I can add you to a waiting list for the ebook. Meanwhile, I hope you guys have had a brilliant week trading. If you've enjoyed this video, please let me know by hitting that like button, and make sure you subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.